Federal officials have begun a major investigation into whether someone or many people benefited financially from the evil done to the country last Tuesday. Not long before the attacks occurred, there were some financial transactions in the stock market that may indicate knowledge of the attack before it began. ABC's Antonio Mora is here. Whether they ever get to, if they ever get to the bottom of it, it will be astonishing.
Astonishing, no question, Peter. What many Wall Street analysts believe is that the terrorists made bets that a number of stocks would see their prices fall. They did so by buying what are called puts. If you bet right, the rewards can be huge. The risks are also huge, unless, of course, you know something bad is going to happen to the company you're betting against.
This could very well be insider trading at the worst, most horrific, most evil use you've ever seen in your entire life.
One example, United Airlines. The Thursday before the attack, more than 2,000 contracts betting that the stock would go down were purchased. 90 times more in one day than in 3 weeks. When the markets reopened, United stock dropped. The price of the contracts soared, and someone may have made a lot of money fast.
$180,000 turns into $2.4 million when that plane hits the World Trade Center.
It's almost the same story with American Airlines.
That's a five-fold increase in the value of what was a $337,000 trade on Monday.
All of a sudden becomes what?
$1.8 million.
And there's much more, including an extraordinarily high number of bets against Morgan Stanley and Marsh & McLennan, two of the World Trade Center's biggest tenants. Could this be a coincidence?
This would be one of the most extraordinary coincidences in the history of mankind if it was a coincidence.
The terrorist lucky streak began the week before September 11th with the Securities and Exchange Commission, or SEC. The SEC, in concert with the United States intelligence agencies, has sophisticated software programs that are used in real time to watch both domestic and overseas markets to seek out trends that may indicate a present or future crime. In the week prior to September 11th, both the SEC and U.S. intelligence agencies ignored one major stock market indicator, one that could have yielded valuable information with regard to the September 11th attacks. On the Chicago Board Options Exchange during the week before September 11th, put options were purchased on American and United Airlines, the two airlines involved in the attacks. The investors who placed these orders were gambling that in the short term, the stock prices of both airlines would plummet. Never before on the Chicago Exchange were such large amounts of United and American airline options traded. These investors netted a profit of several $million after the September 11th attacks. Interestingly, the names of the investors remain undisclosed and the millions remain unclaimed in the Chicago Exchange account. Why were these aberrant trades not discovered prior to 9/11? Who were the individuals who placed these trades? Have they been investigated? Who was responsible for monitoring these activities? Have those individuals been held responsible for their inaction?
Wall Street analyst Phil Erlinger was the first to spot the suspicious trades.
What I see is prior knowledge. You can call it conspiracy. It's my opinion that somebody knew ahead of time that 9/11 was going to happen and they made bets to take advantage of it. And these bets weren't just normal run-of-the-day bets. They were far in excess of what we would call normal activity.
Put options set to expire on September 30th, 2001, were bought on August 6, 2001, or earlier at the Chicago Board Options Exchange. Thousands of put stock options were bought on United and American Airlines immediately prior to September 11th, 2001. On average, during the first weeks of September 2001, 27 put options were bought each day on Morgan Stanley, one of the World Trade Center's largest occupants. The total of its put options for the 3 days prior to the attacks was 2,157. Merrill Lynch, also in the WTC, saw 12,215 put stock options. That is 12 times its normal level. Between September 6th and 7th, Chicago Board Options Exchange saw 4,744 put option contracts with United Airlines, and only 396 call options. On September 10th, put options for American Airlines totaled 4,516 versus 748 call options. In addition, these trades were not only occurring in our country, but around the world. There is no chance that all or even most of the trades were placed by Osama bin Laden or Al-Qaeda. According to Fox News, CNN, and the BBC, insider trading reports were found in the USA, Germany, Britain, France, Canada, Japan, Monte Carlo, Switzerland, Hong Kong, Italy, Spain, Belgium, Luxembourg, and Singapore. The director of the CIA headed a firm that bought some of these put stock options. Until 1998, Buzzy Krongard headed United Airlines stock. Mr. Krongard was head of Bankers Trust until he resigned, and was promoted to CIA Executive Director by President Bush in March 2001. Buzzy Krongard purchased this stock, and our government did nothing about it. Deutsche Bank is also one of the 4 banks most used by the bin Laden family. Additionally, $2.5 million in put options on United and American Airlines went unclaimed. The German central bank president, Ernst Weltek, had a study conducted by his bank. It indicated, quote, "There are ever clearer signs that there were activities on international financial markets that must have been carried out with the necessary expert knowledge in industries such as gold, oil, airlines, and insurance companies."
The firm used to place the put options on United Airlines stock was managed until 1998 by the man who is now the number 3 executive director position at the CIA. A.B. Buzzy Krongard became vice chairman of Bankers Trust when the 2 firms merged, and his new position was to oversee private client relationships. Krongard had a special hands-on relationship with some of the wealthiest people in the world in a specialized banking operation that Senator Carl Levin identified as being connected to the laundering of drug money. Bankers Trust was acquired by Deutsche Bank in 1999 to form the single largest bank in Europe. Before 9/11, Kevin Ingram, an executor for Bankers Trust Deutsche Bank, pled guilty to laundering money to finance terrorist operations for groups linked to Osama bin Laden. Deutsche Bank has been a favorite of the bin Laden family and was connected to the hijackers and their support network. Deutsche Bank had corresponding relationships with banks in Bahrain and Kuwait that served George W. Bush when he engaged in illegal insider trading of shares of his company Harkin Energy. Both banks, Kuwait Finance House and Faisal Islamic Bank of Bahrain, had dealt with Al-Qaeda and bin Laden. But when the Bush administration released its worldwide list of suspect financial institutions vowing to track down terrorist financing, neither bank was on the list. Mayo Shattuck III is a powerful force in the financial world. Head of the Alex Brown Deutsche Bank on 9/11, he had previously been involved in Enron, helping them conceal their massive debt, as well as involved in an insider trading scam involving Adnan Khashoggi's Genesis Intermedia immediately before 9/11. He was midway through a 3-year, $30 million contract as head of Alex Brown when the attacks came, and under his management, some of the illegal trades on United Airlines were placed. Mayo Shattuck has taken over Alex Brown operations in 1997 after Krongard had officially gone to the CIA in 1998. Mayo Shattuck III resigned on the day after 9/11.
In the days leading up to 9/11, there was unusual market activity indicating possible foreknowledge of the attacks that later entered into the peer-reviewed literature. With regards to the stocks of the very airliners that crashed into the towers, The Commission stated in a single footnote that it was highly suspicious trading on its face. However, they dismissed it by stating that the individual involved had no conceivable ties to Al-Qaeda. Paul Zaremka, an econometrician and editor of Frontiers in Econometrics, has been concerned about the lack of discussion regarding academic studies critically examining this topic.
First of all, you shouldn't even be presuming that Al-Qaeda did it. I mean, if you're doing some kind of investigation of how it happened, you don't presume anything. Now, what happened on the data on American Airlines and United Airlines are that both stocks, coincidentally, were around $32 a week before 9/11. And then afterwards, the stocks fell from around 30 to around 18 when the stock market opened 1 week later. So obviously you can make a lot of money if you had a put option on either American Airlines or United Airlines, okay? That's just the data. That's just how things work. Okay, the question then becomes whether there was an unusual level of movements in put options in either of those stocks before 9/11. The put option is one of several methods that you can take advantage of knowing something that's going to happen to a stock price before it happens, anticipating that it's going to happen, and if it does happen in the direction you expect it to happen, then you can make a lot of money. When I say that you can buy a put option to be able to sell a stock later, you're buying the option to sell. You're not selling, you're buying the option to sell, okay? But if I have bought the option to sell, I can also sell my option to sell, okay? So the normal data that you get in publications adds those two together. And then they look at a ratio of that total quantity to another thing which is called a call option, which is the opposite of being able to sell a stock. It's the option of being able to buy a stock. That gives you a put-call ratio. That's publicly available. Professor Podosman is from the University of Illinois at Champaign-Urbana, and he was given confidential data by the Chicago Board of Options Exchange to investigate the issue about whether there was insider trading on American Airlines and United Airlines stocks before 9/11. When I say confidential data, I mean he was actually given exact transactions, which I'm going to argue is significant because the public data are not that detailed. Then he made an analysis on put options which occurred in these two airlines, and he focused on the days before 9/11 up to 9/11 itself. But Podosman was able to look at the individual call and put options and distinguish that which was a sale from that which was a purchase. So in other words, he had clean data the rest of us can't really get a hold of. And from that data, he then made an analysis of was the pattern, the levels in which there was selling of put options, or excuse me, buying of put options, was the level of the buying of put options extraordinary in the days before 9/11 or not? And that's a statistical question of which there is no 100% answer. I mean, any statistical question is a probabilistic statement. His final conclusion is that with probability around 99%, there was insider trading on American Airlines and United Airlines. It was published in the Journal of Business. The Journal of Business is a peer-reviewed journal in which if they get any article, they have to send it out for review from other scholars in the fields. It obviously is a very mainstream publication, whatever you want to call it, business school publication. So it's an outstanding place for such a publication to have appeared. But what's amazing is that I've never seen an analysis afterwards, and now we're more than 4 years later, I still have yet to see anybody counter his work, and yet it's extremely important work. I mean, you would think. I mean, I have been an econometrician. I know how this work is done. If you publish anything that's particularly interesting, some other people are going to make other articles from a contrary point of view, or criticize your data or methodology or something like that. For example, if you do a study of what is the cause of crime, or you're doing a study of does capital punishment increase or decrease the probability of crime, well, you got a lot of people in those articles, and they have to take different positions, and some of them are extremely critical of the other one. In this particular case, this is deaths of 3,000 people, and nobody's contesting his results, which it may mean that they're unobjectionable, but I don't believe that. I think it's more that people are scared to even discuss it. I don't know. It's remarkable to me that normal business school or econometrician, faculty members in departments of economics haven't gone after the paper. It's almost like they prefer to ignore it than to discuss it.
Hi, Max Kaiser here. Welcome back to the Kaiser Report. Time now to go to New York City and speak with Jim Rickards, author of this new book. It's called The Death of Money. Remember, Jim did the Currency Wars book, which became an instantaneous global sensation and bestseller. Now he's got the new one, The Death of Money. Jim Rickards, welcome back to the Kaiser Report.
Thank you, Max.
All right, let me read you a quote from your book. Quote, "It was the most blatant case of insider trading I have ever seen." This is a quote from the first chapter of your book. Tell us about it.
Well, the insider trading referred to in Chapter 1 of The Death of Money, Max, has to do with shorting airline stocks in advance of 9/11. So there was insider trading ahead of the 9/11 attack. It was very blatant, very clear. It was not picked up at the time. It was by some people in the market, I should say, but not by the intelligence authorities or any national security officials, but it was seen in the market. That quote that you read, by the way, comes from John Mulheron. Here's a guy who knew about M&A, leaked information, insider trading, etc. He was one of the most famous stock traders on Wall Street, ran one of the largest specialists on the New York Stock Exchange. He was, at the time, the market maker in American Airlines stock. So hard to find anyone who knew more about trading, more about insider trading, market manipulation than John Mulheron. And that conversation took place, actually, at CIA headquarters in Langley, Virginia. So I was part of an investigation. This all discussed in the book. There's a lot of academic evidence, there's forensic evidence, there's anecdotal evidence, but the case is overwhelming that there was insider trading ahead of 9/11.
All right, you mentioned this CIA headquarters and the fact that there was talk about insider trading ahead of 9/11 in the days leading up to the events of 9/11, particularly 4 days leading up to 9/11, looking at the forensic evidence and looking at markets as a way to aggregate lots and lots of data. And you talk about this in your book, the way that your team presents to the CIA a way of what you call market intelligence, or MarkEnt, which is to use this very sensitive options market as a way to give a telltale sign of activity that's happening around the world and whether potentially this would flag a terrorist attack. So in the days leading up to the 9/11, in the options market, in those airline options, you have concluded without any equivocation that there was insider trading on those options leading up to the event, correct?
Well, that's my conclusion, Max, but it's not just my conclusion. As I mentioned, there are 3 major academic studies as well as other anecdotal evidence all pointing in the same direction. So to me, it's an open and shut case. Your larger point that markets give us price signals, we know that, but how to look behind the price signal and understand exactly what's going on. By the way, this technique, which we explored for the CIA, is a completely normal technique used by hedge funds every day. Now, hedge funds are looking for insider trading around M&A deals. They're looking for a leak. You know, we see this all the time. A stock suddenly soars for no reason. There's no news. Maybe the market's flattened down, but a particular stock goes way up, and everyone said, gee, what's happening with that stock? And then 3 days later, we find out that it's the subject of a takeover that's announced, but clearly the takeovers don't come out of the thin air. They're, you know, lawyers and accountants and experts and managers work on these things for weeks and sometimes months, and that's the inside group. But sometimes the information leaks out, people trade on it, and you see the price action ahead of the announcement. That's exactly what we saw on 9/11. There was massive, massive buying of put options, and of course when you buy a put option, that's a bet that the stock is going to go down. Massive buying of put options on American Airlines and United Airlines in the last several trading days ahead of 9/11. And again, that's been studied extensively, so I don't think there's any question that it was insider trading.